Good morning, everybody. It is September 27th, 2023, 8:46 a.m., and we are here on a beautiful Wednesday to discuss everything that's going on in the world of markets, the economy, technology, business, all of that exciting stuff. We've got a lot of stuff to run through today. Thank you all for joining me. Republican debate is going to be on tonight, the second Republican debate of the year. Donald Trump will not be attending that debate. He will actually be going to Detroit to speak to the United Auto Workers Union, which is very interesting since Joe Biden spoke to the union yesterday. So we'll talk a little bit about that today. We've obviously got some major headlines in the news. The Fed's Neil Kashkari went on CNBC today. We got that clip coming up in a little bit, and some of the stuff he said just makes you want to not do nice things to the screen that you're looking at when you're watching him say these types of things. So we'll analyze what he thinks about the state is of rates and markets. And obviously, the headline of the day, Palantir, $250 million, $250 million they got over 3 years, $83 million per year, $21 million per quarter over the next 3 quarters for a new research and development Army AI machine learning deal. So we got a lot to talk about, a lot to discuss. Thank you all for being here. It's going to be a fun market open. Joseph, Roy, Markets Investing, Edmund, Alan, Mauro, Gators, Bryant, Robinson, Andrej, Victor, Carlos, Johnny, Bayray, Cayos, Perez, John Schwartzbeck, Marvin, Victor, Hernandez, NHS deal. We're also going to talk about that. Socrates, Marcus, Garcia, Jamal, Foray, Brian C. Thank you all for being here. Jude Jr., Emmanuel 20, Bike Rip, Sethi Roth, Simple Investor. Amit, you have become my background noise every morning. Keep it up. Thank you for having me enter into your home. It means the absolute world to me, and I appreciate it. So thank you for also being here as well. Joseph CW, Johnny B. Good, Dario, Nolan. What's going on, Amit? What's going on is that Palantir got some money. So we got a lot to talk about. Thank you all for being here. I do want to say, someone said in the chat, I think Joseph said to live stream the debate. Finance Junkies is thinking of doing that today. We're likely going to be live streaming at 9 p.m. I have YouTube TV now, so we'll be able to live stream it. And during the breaks, we'll just talk about what's going on in the debate. So if you're interested in the Republican debate, we are going to be there 9 p.m. To 11 p.m. Eastern Standard Time, 6 to 8 Pacific. And we'll be discussing all things around the Republican debate. And we'll see if it's an exciting debate and not too boring. All right, let's get into it. First topic of the day. Here we go. Let's start off with Palantir. Palantir recently received a $250 million deal. This news broke last night, and the Palantir community definitely has been pretty excited about this news. So I just want to share a couple of things about this. I have another video coming on this a little bit later throughout the day where I'll go deeper, but just to give you guys the quick headlines, and then we'll go deeper into this. Top line thoughts is this is why investing in Palantir is really interesting, because they are a defense contractor first and foremost, and then I believe they're a commercial company. And that's the really interesting thing to me. I mean, when you're buying Palantir, you're buying a defense contractor. Commercial is a cherry on top. I believe commercial can scale massively throughout this company. But even if it takes longer to scale commercial, and why is it scaling long? Why is it taking longer? Why are we in a 13% growth rate year over year cycle right now? Because of interest rates. Quite frankly, I think the macro is tough, and obviously a lot of people are not going to adopt a company like Palantir that easily. However, in the meantime, you've got geopolitical tensions, which have also led to the rise of, or to the lack of commercial adoption, because, you know, there's just too many things going on from a political perspective across the world that is enforcing the government, particularly of the United States and of other NATO countries, to think more deeply around their investments in AI. Palantir wins a $250 million firm fixed price contract to conduct research and development services in the area of artificial intelligence and machine learning. This will be completed on September 25th, 2026. Now, I want to show you guys something that you guys might not have seen. If I just show you this contract, we got the same exact contract, $43 million for AI and ML research. A lot of people have forgot about this contract back in September 2022. That contract, however, was only for 1 year. So if you take a look at this here, we got a $42.9 million firm fixed price contract to conduct research and development services in the area of AI and machine learning. That is literally the exact same wording as the $250 million contract we got yesterday. However, that contract ended, well, it's going to end tomorrow, September 28th, 2023. So we got a contract a year ago, think about this, for $43 million. around just R&D. And I'll talk about the R&D component. And I have some interesting thoughts about that in the context of AI and machine learning back in 2022, before ChatGPT had exploded, before AI had become a thing, got 43 million bucks. That contract ends tomorrow. So obviously Palantir had to re-up that contract. Now the government had two decisions. Either they were going to re-up that. Oh, I'm not even sharing this. Hold on. Share this tab. There you go. I'm sorry about that. I don't think you guys saw that. Right here. This is the slide right here. Obviously, the government had to realize after this $42 million contract that they gave to Palantir last year that is expiring tomorrow, do we re-up the contract or do we, take the contract's not worth anything? Like Palantir did a good job, but whatever. We're not going to give them another deal. By the way, when they got this contract, 999 bids were solicited, meaning 999 other companies applied for this type of deal. Palantir ended up getting it. Lo and behold, a year later, not only does the government increase the $43 million they were paying a year for AI and machine learning research and development services by a factor of 2, it went to $83 million. They give it a 3-year guaranteed timeline, and they double the price every single year, $83 million per year for 3 years, $250 million. That means, all in all, I mean, the TLDR about this is that the research and development that Palantir was doing in the context of AI and machine learning was actually beneficial and useful. And as a result of it being actually beneficial and useful, the DoD made a very simple decision that says, look, we don't know how to do R&D for AI and machine learning. We know we need to modernize our efforts. We know we need to enable AI throughout the entire military and army. We know that China and Russia are working on this shit. And like Alex Karp has been hounding the horn that this is actually happening. And so this is where you get a $250 million contract that says, you know what, Palantir, you guys are the ones that can do it. $250 million for you guys. We don't really need other people in this world. If we were going to spend $250 million on 5 competitors, let's just give it to you, get the job done. And that's the key. They get the job done. This also coincides with what we heard from Cathie Wood a week ago, which has her podcast coming out tomorrow that I think I might react to live and watch that podcast live with you all. But her thesis in the latest webinar was that they sold out of Palantir in 2022 because of the fears of the government procurement essentially becoming more competitive. They talked to generals and colonels, and basically all the generals were like, look, we can't live without Palantir. We need this software. Then you had Bank of America that went to the software for government conference just last week. They talked to generals and colonels, and it reinforced their belief that, holy crap, Palantir is not only embedded in the government, these people don't want to use anything else other than Palantir. And so you combine all these things coinciding with the fact that the United States is trying to modernize their AI efforts, and you get Palantir getting $250 million. That is a big, big deal for shareholders. Now, the stock. Let's talk about the stock real quick. The stock is not up in the pre-market. I mean, it's up 1%. Nothing earth-shattering for a $250 million deal. I personally am not in the belief that the company right now at $14.11, up from $13.96 yesterday, should be benefiting from this contract in terms of its stock price. $250 million is $83 million a year, $21 million a quarter. It's great revenue growth if it coincides with other contracts, right? Because we got to ultimately grow revenues, hopefully larger than 13%. But I think the market expected Palantir to get these types of deals, right? If it would be a bigger concern if Palantir wasn't getting these deals. So to me, this is more so, not an earth-shattering contract that's like, oh my God, all this more incremental revenue that's coming in. I think the market pretty much expected, yeah, you should be getting these deals. This is about the time of the year where the government starts allocating capital from the defense budget. The NHS deal, however, that's supposedly supposed to be announced tomorrow, that would be, I think, something that I think it should move the markets, because $500 million for managing the entire UK's healthcare system is a big deal. And if we don't get it, then I think it might also move the markets to the downside. Maybe if we get it, it doesn't move the markets that high up to the upside, but I definitely think it's a big deal and is important for Palantir. As we can see here, shout out to Lord Heru Grimm that tweeted this out right here. This is the stage selection from the NHS's website, January 10th, 2023. This is when they started the issuance of stage 1 for this contract. And 28th September, 2023, the contract award is supposed to happen. I think it's going to happen tomorrow. You never know with the government. You never know with these governmental websites and if they're actually correct about this stuff. But if everything is correct, as we're seeing, we will get a deal announced tomorrow. Either it's going to be Palantir, either it's going to be a split of Palantir and other companies, or either Palantir is not going to get the deal. That's what's going to happen. And so to think if we get a $611 million deal from the NHS tomorrow and a $250 million deal from the United States, that's $850 million over the course of 4 or 5 years in just 2 contracts. I mean, that just blows my mind that a little $30 billion company like Palantir is in the running for some of this type of stuff. I mean, it's not easy to get these types of deals, and it's incredibly important for them to be able to actually still get this stuff. The other thing, is very interesting. There was a article that came out back in June that Palantir is an AI imposter. I think if the military, and this is the last thing I'll say on this, and then we'll move on. If the military is paying you for research and development in the context of AI and machine learning, it's just hard for me. And I'm not the smartest guy in the world. Trust me, I'm not a smart guy. I tend to think I'm okay at communication, but I'm definitely not the smartest guy in the world. I can kind of confer, if you put 2 and 2 together, that if you're getting paid $83 million a year to do research and development around AI and machine learning by one of the world's best democracies and largest economies in the world that decided to allocate that money to you a year after you got $43 million to do the exact same thing, so they re-upped and doubled the contract, that maybe, just maybe, there's a slight chance you are not exactly an AI imposter. You might actually have some level of an understanding of AI. It's again, I'm not the smartest guy in the world, but I'm putting that together, and I think that might make some sense. All right, so that was the Palantir deal. Hopefully that ends up happening. Final thing I'll say is this research and development, and this is what I talked about in my video today, it's basically free R&D for Palantir. I mean, people are forgetting how big of a deal this is. The military is paying you $250 million to do R&D. Guess what? Palantir has to do R&D internally. Look, I'm so excited my pen fell. Just to come up with new product ideas, right? Apple can't make the Vision Pro unless they go through 5 to 10 years of R&D around mixed reality, headsets, etc., and then they come out with a product. You have to do R&D. It's billions of dollars when you're at a very big scale to come up with new products, new ideas, new software, etc. Palantir is basically getting paid to do R&D for the military, and as a byproduct of that, they're doing R&D for themselves to figure out what are the next best products to sell, not only to the military, but how that'll translate into commercial. So to me, this is an absolute killer of a contract. It makes a lot of sense, and there's a ton of benefits, not only for Palantir, but obviously for shareholders writ large and internally within the company. So big deal for me, and it makes a lot of sense. All right, that is the news on Palantir. Let's move on to our next segment, which is the Fed. The Minneapolis Fed president, Neil Kashkari, went on CNBC just 20 minutes ago. I'm about to play the clip, and it's very interesting to listen to what he has to say. This guy holds voting power on the board of directors for the Fed. I think they're called the board of directors, whatever they're called, the main people that make the decision. And his vote matters. I mean, he is one of the guys that decides if rates stay higher or if rates come lower. Obviously, most of us feel that there is no world in which rates should get higher, given the lag of data the Fed has in regards to inflation, and we're likely going to see CPI fall pretty precipitously over the next couple months. But this guy has continuously, if you don't know who he is, remained either hawkish or wrong. In 2021, he was one of the main guys championing this whole transitory narrative. He was wrong. And now they're championing this narrative that inflation is here to stay. It's not going away. It's really too sticky. And I give them some credibility on that because there is pockets of the economy where it's sticky, like oil and gas. But I think a lot of those things are external to what's happening in the United States. But one could argue that their credibility is gone. And so it's really interesting what he has to say. I tend to be a little bit more forgiving of a person and be empathetic. I got that trait from my mom. So I tend to not try to criticize people when they get things wrong, because I could get things wrong, right? And you don't want to be the guy criticizing other people when you get things wrong, because everyone gets things wrong. However, when you're part of the Federal Reserve of the United States, it's really your job to look at real-time data and not get these things wrong, not get inflation as transitory wrong. And unfortunately, they got these things wrong because of a lack of looking to real data. And so here's what he has to say. Let's take a look at it, and then we'll analyze it on the back end.
This morning, along with our own Steve Leisman. I can handle one more. You guys were doing 75. You did 3 or 4 of those. So another 25 I can handle. What I love about the Fed is that you can institutionalize words. You remember conundrum? No one used it until the Fed started. Then there was significant, or was it substantial? And then if you say substantial versus significant, that makes a difference. Now there's 2 I want to talk to you about. What's a lag? And can you define it? And can you tell me how long it takes for it to happen? And the other is restrictive, because that's what I'm focused on right now.
Yeah.
Are we restrictive right now?
Sufficiently restrictive. That's
another good one. Are we
sufficiently restrictive?
Are we sufficiently restrictive right now or not?
I don't know.
All right.
Very unsatisfying. I know, very unsatisfying, but you're asking the most important question. So the definition of restrictive in my mind is, where are long-term real rates relative to the long-term neutral rate? And we can't observe the neutral rate. We could kind of estimate it. I thought before the pandemic, the neutral rate was around 0% real. We're at plus 200 basis points relative to that now. But it's possible, given the dynamics of the reopening of the economy, that the neutral rate may have moved up. So one thing that makes me cautious that we might not be as restrictive as we think is that consumer spending has remained robust. GDP growth continues to outperform. And the two sectors of the economy that are traditionally most sensitive to interest rate hikes, autos and housing, have both indicated some signs of bottoming, and in some cases are starting to show some recovery.
Okay, now Becky, one of the hosts on CNBC, is about to fact check him on the housing. It's going to come up in a couple minutes, and it's going to be a really interesting moment. But what he's basically saying is the consumer is strong, the economy is good, therefore we need to be more restrictive. And that, to me, is where the Fed is losing credibility. They're like, because the economy is not crashing, we need to be more restrictive. And obviously, CPI will be and core PCE will be the determiner of if this makes any sense or not. But if inflation is coming down and the economy is doing well, you don't need to crash the economy. You don't need to break it. And a lot of people think the Fed is unnecessarily trying to break the economy to get inflation down when they're not even looking at the real data that tracks inflation.
That makes me cautious that we might not be as restrictive as we otherwise would think.
But on the other hand, John Fort, referencing John Fort, on the other hand, since we don't know about lags and how long they take, when I cook a steak on the grill, I put it in tinfoil because when it comes off the grill, it may not be. You leave it there for 5 minutes, it cooks more.
Yeah.
It cooks more. And you overcook it if you just, maybe we're already
Steak lags and monetary policy.
Maybe we're
lags. I
too.
like that, Joe.
Isn't it possible that it's getting more restrictive
Cooking.
day by day without you doing anything?
It is possible. That's correct. And that's why we have slowed the pace of our hikes. As you said, we did 4 75 basis point hikes. Then we took a gap. We did 25. We took a gap. We did 25. We didn't do anything this past week. So we are allowing the data to come to us to try to figure out how much effect are we having in the economy and whether or not we need to do more. So we agree with that. And as inflation continues to come down.
He's like, we punched you, but we punched you very slowly. And we might punch you again, but we'll let the data determine how badly we punch you.
And we've made a lot of progress. I hope it continues. If policy stays where it is, real rates get tighter. So that's another factor.
What if oil stays where it is? Joe did all the highfalutin questions, which I normally do.
But I'm done. I'm exhausted. I mean, I'm like,
what about high oil prices? Is that something that you think in order to higher rates?
Not by itself. I mean, it can have an effect on consumer spending because it crowds out other things that households have to buy. But as you know, we look at core inflation because energy prices tend to move around a lot. And so I wouldn't look at energy price moves and say that's definitive on what inflation is going to do. But it is something that affects the economy.
Neil, just getting back to the places where you're seeing rises again, energy prices being one, housing being another. I mean, those are supply issues that you don't have any control over. So you can raise rates to infinity and you might not be able to fix
but don't.
Right. But those are, I mean, it's a pretty blunt tool to try and fix those issues with higher rates.
Becky is exactly correct here. A lot of this stuff is a supply issue. Housing, the reason prices are so high is not necessarily because of rates. There's a correlation, obviously, but it's because we have a lack of supply. And as more supply comes onto the market, that demand is going to normalize, which means prices eventually will come down.
I understand. Monetary policy is absolutely a blunt tool. But when we've seen such high inflation as we had over the past few years, we have a job to do, get inflation down to 2%. We've made a lot of progress. I feel very good about that. We need to finish the job. And whether we have to go higher from here, we'll see what the data tells us.
What is the prevailing view in the room about all of these strikes and the union efforts and the increases in wages across the country and what you can and can't do about it and what you should or shouldn't do about it and what it means immediately for inflation and longer term?
I mean, I think my view is we want to see workers enjoy higher wages. I mean, that's absolutely true. The labor share of income has been declining for 40 years. That's an economic conundrum. I don't think it's a healthy thing. At the same time, we model out what do we think the strikes mean for the U.S. economy or a potential government shutdown for the U.S. economy. Traditionally, these strikes have been shorter lived and there's not been a big imprint on the economy as a whole, but it's something that we're watching. It's scenario planning.
But when you see the sort of significant increase that will likely result from at least some of these strikes, do you say to yourself that's a good thing because you want higher wages? Or do you think that's a bad thing because it's going to make your job that much harder?
Well, it's something that I looked at, especially a year or two ago when inflation first took off. I started paying a lot of attention to union contracts and whether they were adding back in the cost of living adjustments. In the 70s, almost all union contracts had cost of living adjustments built into the contracts because high inflation was so present everywhere. Over the next 20 years, they sort of fell away. Then they started creeping back in. So we do pay attention to these contracts for what they mean about the future of inflation and whether or not inflation expectations are getting embedded in the economy or not.
What I worry about is
It's like no one on the panel agrees with him. No one believes in him. No one understands what he's trying to say. I'm going to get to that point where Becky kind of tones in here a little bit around rates. Let's see if it's right here, and let's see what she has to say.
The economy and create a recession.
Well, we're certainly not trying to quash the economy or create a recession. Some of that progress has been energy prices, which, as we discussed, are volatile. Core has been stickier. Services has been quite sticky. And the fact that there, by some measures, housing is ticking up again. I know you mentioned, Becky, that it's supply. No question. But there's also demand matching that supply. Gives me reason to be paused.
I mean, there's a lot of pent up demand.
There's a lot of pent up demand.
And rents are going up. And by the way, everything you do to try and fix inflation makes housing more expensive, which makes rents go higher because you can charge more for rent when people can't afford to buy. It's a crazy cyclical thing that just catches people who happen to be in a position to have to move right now.
Yeah, we nonetheless have a job to do to get inflation back down to our target. And
he has no answer to that, right? And so he's like, it's like that mantra. It's like you're in a mob, you're in a cult. It's like, we have to get inflation back down to our target. So basically she's saying when you raise rates in general, mortgage rates go up, which means you have people that don't want to sell their home and then buy a new home with higher rates. You have people who generally don't want to buy a home because obviously rates are so high. They'll just wait till rates come down. It's the general sentiment. Obviously, you can refinance, but the general public doesn't want to buy a house at 8% over 30 years, and which means you're going to rent. Well, if you're going to rent, that means there's going to be more demand for rent, and the landlords have more leverage because if you're not buying a house and you got to rent, well, you got to rent somewhere, so we're going to jack up the prices. And so she brings up this argument to him around how raising rates doesn't solve that issue. It's like that doesn't solve the issue. You can't solve the issue doing that. And he's like, and his response is, we have a target of 2%. We need to maintain that. And look, I don't blame him that much because I get you. These are hard economic questions and you can't answer them. But at the end of the day, it just goes to show how much the Fed really doesn't know exactly what they're trying to do, which is why we got in this situation in the first place. We got a new article here piggybacking on that. Mortgage demand shrinks as interest rates hit the highest level in nearly 23 years. The average contract interest rate for 30-year fixed rate mortgages this morning increased from 7.3% to 7.4%. This is if you're financing a house of about $726,000. The average house in America right now costs $430,000, which is up from about $380,000 just a couple of years ago. Applications to refinance a home loan fell 1% for the week and were 21% lower than they were a year ago. And applications for mortgages to purchase a home fell 2% for the week and were 27% lower than they were the same week ago, which is why I ultimately conclude Neil Kashari is talking his talk. He has to talk what he has to talk. He doesn't want euphoria in the markets, just like Jerome Powell and the rest of the Fed. But absolutely, this is not one of those scenarios where I think they're going to raise rates because they know how bad it is. Now, he went on record. He did a Wall Street Journal piece a couple days ago saying one more hike is likely needed. So the guy you just saw with those beautiful, crazy eyes, however you want to describe them, somebody described them as scary, said we need one more hike. He is ready to hike again. And so if he feels inflation is not coming down and he has a deciding vote, we will get another hike. Hopefully there's enough Fed members that see some common sense and be like, it's probably not a good thing to hike. But ultimately, he's going to be one of the deciding factors to see what ends up happening. All right, so that was some stuff over the Fed. Oil is up over $92. It was at 91 yesterday. Now we're at $92. Likely going to be stabilizing for a while. Chris actually made a great point on Finance Junkies last night that Venezuela sanctions and Iran sanctions are decreasing and they are increasing production of their oil, which means we're going to start importing more oil from other places than Saudi Arabia, like Venezuela and Iran, which theoretically should maybe stabilize oil prices to an extent. I mean, he was trying to come to this conclusion that if we have more supply, obviously that'll normalize some of the prices. That may take a while to play out. It might not happen as soon as we think. But that is one potential green light. Obviously, we don't want to do business with Venezuela, but we might have to do business with Venezuela in order to lower some of these oil prices. Let's get an update on markets before we move on to our next topic, which is going to be about Amazon. Right now, Palantir sits at 1414, up 1.29% in the pre-markets. S&P 500 we have right here is actually up at 427. It ended at 425 yesterday. I didn't even know the S&P ended at 425 yesterday. So we're officially in that 420s range. $5 down. We are at a 10% correction. 427 right now, up 0.4%. Google's up 0.40%. PayPal's up 0.68% at 59.33. SoFi 749 is up as well. Instacart is up a little bit at $30. Netflix is up a little bit, 381. Nvidia at 422. And Robinhood at 960. Markets green in the pre-markets, not as green as, one would want it to be green, but it is definitely not red. The 10-year this morning is also down, and the 10-year coming down definitely has probably led markets being up. 10-year right now at 4.503. It's not below 4.5. And I think when it falls below 4.5, we might see a little bit more recalibration in some of the equity markets. I personally still believe when we hit 420 on the S&P, which I think is possible, 4,200, the trillions of dollars in money market funds are going to start to see equities become a lot more exciting. If that does not happen, if the 5.5 trillion on the sidelines that are getting 5% or 5.5% or 4.5% from SoFi, 4.9% from Robinhood, if they're not feeling that equities are attractive at 420, there is definitely a lot of more downside to go, because you need some liquidity to enter the markets when equities get that bad. Otherwise, it's just going to be extreme fear, which is where we're kind of at on the greed and fear index. That's going to push markets even lower, which theoretically should be great buying opportunities for that 5.5 trillion of liquidity to at least somewhat get excited for the markets. But if they don't come in, then it's not going to be the best for the stock market. So you have some people that think you should be a net seller of stock. You have some people that think this is buying the dip. I am of the opinion that if you want to buy the dip, I do think this is an opportunity. I just don't think you should go all in. If you got $25,000 to buy the dip, I would be putting in like 1,000, 2,000, just testing a little bit, because things can absolutely fall lower. But there is no fundamental catalyst, in my opinion, for the stock market to decline back to 3,400. Like the earnings and the consumer simply don't support what we've seen throughout the entire year. Yes, has there been a little bit of an AI bubble? Sure. But Google had record earnings. Apple, even though they're down, they still did $81 billion. Meta, amazing earnings. These earnings were phenomenal. PEs, when they were at 10 or 11, deserve to be at 20, 25. Maybe the PEs could go down to 19, 20, 21, sure. But I don't think it needs the cataclysmic decline that we saw back in October of 2022. And so we'll see what happens there. One other interesting fact, and then we'll move on to our next topic about Amazon. Banks saw their largest decline in deposits since, forgetting the exact stat, but since about a decade. They saw their largest decline this year. So they went from about 18.2 trillion to around 17 trillion. Now, you may think on first sight of this data, like, oh my God, $1 trillion outflowed from the banks. This is a really bad thing, right? Because the banking sector is vital to the U.S. economy. If we have a bank run on the banks, that's not going to be good for anybody. However, what isn't mentioned, which is a really good point I was reading about this morning, is that a lot of that money that outflowed was because a lot of money inflowed. We had, what was it, $1,400, $1,200, and then $600. So about $3,200 per American if you made, I think, 75,000 or lower of stimulus checks. Trillions of dollars flowed into the economy in terms of us just printing it and giving it out in the United States, which means all that money ended up going into bank accounts and then ended up being spent. A lot of that money declining may seem like a lot, but a lot of money was artificially put in. So you may see headlines that bank deposits are down. A lot of that is fear mongering, because a lot of bank deposits went up dramatically and really abnormally in 2020 because everyone got a fresh stack of money sent to their homes back in COVID time. So even though deposits are down, they are still pretty normalizing over the past couple of months, and they're not down to the point where it's so significant that anyone should be super worried. All right, let's get into Amazon. Lina Khan has gone on CNBC. Here's what she had to say about why she is suing Amazon. I think her arguments were pretty interesting. I try to stay neutral on the market open, because that is my job, but I'll let you guys decide, and we'll analyze it on the back end, what you think about what she has to say. She is the chair of the FTC.
Resulting in higher overall prices for products on the internet. Joining us right now is FTC Chair Lina Khan. Chair Khan, we very much appreciate you joining us. In your lawsuit, you say a single company, Amazon, has seized control over much of the online retail economy. It's 172 pages, but I'm going to ask you sort of the very basic, I think, underlying question, which is, what do you want? What is the underlying goal of this? You don't seek necessarily a breakup or anything else.
Thanks, Andrew. Good to see you. So this lawsuit is fundamentally about protecting free and fair competition. And the U.S. antitrust laws prohibit firms from using their monopoly power to punish or preclude or prevent competition. And that's what our lawsuit lays out that Amazon has done. The consequences of that are very serious for sellers who now pay $1 out of every $2 to Amazon. So this is effectively a 50% tax that businesses pay to Amazon to reach shoppers. And that in turn inflates prices for consumers. And it inflates prices for consumers not just on Amazon's own site, but actually across the internet. So that's really what this case is about, is making sure that we're fighting to protect free and fair competition and ensuring a marketplace where firms are able to compete on the merits and the American public benefits from that competition.
But how would you solve that? Which is to say, I think when you go into a case, there should be some form of a remedy.
Yeah, it's a great question. And this lawsuit is really at this stage about the liability, laying out how, as we allege, Amazon has violated the antitrust laws. One thing that we make clear in the lawsuit is that you really have to understand the dynamics of digital markets, and in particular, online commerce. We quote Amazon execs who note that in order to really succeed in online commerce, you need to have a certain degree of scale. Given just the economies of scale and the network externalities, you need to have a critical mass of either shoppers or sellers in order to really benefit from the acceleration and momentum that digital markets can provide. And what Amazon's tactics have been about is, once it itself achieved that scale, it's been focused on tactics that deprive rivals of the ability to gain that similar critical mass of customers. So, in the way that the economies of scale in this market mean that the harms also scale, we want to make sure that the judge recognizes that the harms have aggregated, and any remedy would need to take that into account to fully restore competition.
Okay, I want to say a couple things. We'll get right back to the interview, but two things I do want to say just to add a little bit of my input, and then we'll get back to her. So she says that sellers have to pay to use Amazon, which is called a traffic fee, because Amazon has 2 billion hits a month in terms of organic visits. And if you're a seller, yeah, you kind of have to pay to access that. That's called using someone else's platform. You didn't build Amazon to get 2 billion original visits every single month. And so as a result of that, that inflates prices for the consumer because the seller has to pay this traffic fee. First of all, I think she doesn't understand how Amazon selling actually works. And I actually did sell on Amazon back in 2018. So I have a little bit of inside knowledge on this. The reason you pay that traffic fee, which, yeah, it's annoying, but it's because it's Amazon's platform. Like you have to pay for a fee if you're going to benefit from their traffic. They are in no obligation to let you sell on their platform. They're not some public, open source business. They're a private company. I know it's a publicly traded stock, but they're not a nationalized service. They're allowed to do whatever the hell they want. It's a benefit that they're allowing you access into their platform. This idea that it inflates prices for the consumer, of course, someone's got to pay for that, right? So if you're going to sell a water bottle for $15 and you might have to charge the consumer $17 because you have to pay all these different fees. There's, by the way, a shipping fee, a traffic fee. There's a lot of different fees Amazon charges. The consumer might have to pay a little bit more. To say that is grossly over exaggerated, the prices consumers have to pay on Amazon. I think with the 578 people here in the chat, no one would agree. I mean, Amazon is cheap, bro. I've been buying stuff on Amazon in the past. I bought some socks the other, it's cheap. We use it because it's cheap. Otherwise, people would not use it. And you get it in 2 days. So you're willing to pay a little bit of a premium for the convenience of it. And that convenience, by the way, is because they have economies of scale. Shopify, eBay stores, they can't get you that stuff in 2 days. It's like impossible because they have to go through a warehouse, distributor, etc. Amazon has all that vertically integrated. So I think if this is harmful for the consumer around monopolistic practices, she's dead wrong on this being harmful for the consumer, even if prices go up a little bit. The final thing she says here before we go back to the interview is Amazon has adjusted a critical mass for shoppers, and most online stores aren't competitive unless they get a critical mass, meaning there's a ton of people using the service. Therefore, the dual-sided marketplace of buyers and sellers can't really thrive unless there's a critical mass of users. That's called building a company, Lina Khan, something I don't think you've ever done before. It's really hard to get a lot of people to use your shit. Shopify is a very successful company because they convinced a lot of small businesses to use their shit because they made a phenomenal product. Amazon, YouTube, Netflix, they all have a ton of people using their stuff because they built it really well. To try to delegitimize that and basically say, you have a critical mass that you worked your ass off. Jeff Bezos took all the risks to try to be able to come up with that stuff, and therefore you're monopolistic to other companies. Those other companies didn't create that critical mass. The idea that other online e-commerce stores cannot create a critical mass of users using their product, I think is baloney. I mean, at the end of the day, if you're good at marketing, which is hard to do, but if you're good at it, then yeah, you can get a lot of people using the product.
Chair Khan, let's just talk about the sort of single gating factor before you get into all of the other issues that are in this litigation. There is the fundamental question as to whether Amazon is a monopoly. This is a market question. What is the market that Amazon controls or doesn't control? They would tell you that they are 4% or less of retail in America, and they would include brick and mortar stores and every retailer around in the world. you have defined it in a very unique way. You talk about online superstores, which is a category I have to say I haven't heard about before, because it effectively limits it to a very, very specific group. And that you'd have to have monopoly power. It's not just market power for a lawsuit like this to work, correct?
That's right. So the idea of a superstore has actually been well established in the brick and mortar world. So we've had a whole set of antitrust cases that have succeeded when defining a market as the superstore market. And so this case is really applying that context in the online market sense. And, the complaint details why it is we believe that the online superstore market is a relevant market, as well as the market for online marketplace services.
But does that mean that the people who are at an online superstore don't compete with everybody else?
That's right. There are certain dimensions of competition that only online superstores can fill, and the complaint lays out what some of those key dimensions are in terms of depth and breadth of selection. And so the complaint lays out why it is that we believe these are relevant antitrust markets. One other thing I will note, in antitrust, there are multiple ways to be talking about monopoly power. One is through, defining the relevant market, talking about the percentage of that market. The other way is by showing direct evidence of monopoly power. And you can show that by showing that a firm is hiking prices, degrading quality, and not suffering the consequences. And so what this lawsuit does is it talks about the direct evidence of Amazon's monopoly power, both with regards to sellers, where it's been steadily increasing the take rate so that it now takes one of every $2, but also with regards to quality. So we lay out in the complaint how Amazon has rolled out this pay-to-play advertising scheme that is actually showing consumers less relevant results and steering them to more expensive products. So
yeah, I think that might be BS. I mean, Amazon is incorporating a lot of AI into their advertising to make it a lot more efficient and better. And at the end of the day, an advertising business, yeah, it's going to steer you to something more expensive because it's an ad. Like the person's paying to get you to buy their stuff, which is probably going to be more expensive than the competition, but they're paying for you to get it. That just means, and then you click on it and then you decide if you want to buy it or not. I mean, if you're against the concept of advertising, that's a different discussion, but I don't think that's necessarily monopolistic.
So the direct evidence of monopoly power is also something that we lay out in the complaint.
So here's the part that I was trying to understand as I was reading it. The part of the lawsuit says that Amazon is forcing third-party sellers to keep their prices almost artificially low in certain circumstances against rivals at other stores. So that would be ostensibly good for customers. And yet, at the same time, it appears that the same lawsuit is suggesting that Amazon is using its market power to jack up those prices and raise them. And I'm trying to sort of square that circle.
Yeah, it's quite in the weeds, but in short, Amazon has a policy that punishes sellers or retailers that lower their price anywhere other than Amazon. At the same time, Amazon is also steadily hiking the fees that seller pays. So sellers have to inflate their price, not just on Amazon, but also across the rest of the internet. And in practice, what that means is that if you had a platform or a retailer that was actually more efficient or that was actually more innovative, it would not actually be able to compete on price because of Amazon's anti-discounting tactics that punish any sellers if they are in any other retailer or platform while lowering prices. So Amazon's tactics are closing off the dimension of price competition, which is an incredibly important form of competition and ways for other firms to be competing on the merits. And so that's the dynamic that we lay out in the complaint.
Here's the reason why none of that made any sense in the context of their case. You ready for this? Lina Khan, I didn't go to Yale. I know you went to Yale. I know you wrote a fancy little thesis on Amazon when you were a Yale graduate. I went to Rutgers. I went to a state school in New Jersey. But I know a little bit about arguing. The reason everything you just said is nonsense in the context of Andrew's question is because none of that hurts the consumer. So Andrew's question was like, wait a second, Amazon has a policy to make sure sellers don't increase their prices, but you're saying Amazon is artificially forcing sellers to increase their fees. How do you reconcile this? And then she goes on some mumbo jumbo that we can't have true price competition, which is just competition in the marketplace in order to discover if this worth $12, $15. You have to have a free market that competes to be able to figure out what is the value of this water bottle, for example, which is where consumers are willing to pay. In order to do, and you can't have that true price discovery because of Amazon's restrictions on sellers, which means other sellers can't sell at the same level because they have to pay increased fees, but they're not allowed to inflate their prices. The problem is none of that affects the consumer. If prices continue to stay low, the consumer gets to keep paying low money for that water bottle. If the seller doesn't make a profit, tough luck for the seller. But you as the FTC can't make that claim because that's a whole different argument in the context of the consumer. If your argument is that Amazon is using monopolistic practices, which you might even be right on that they're using some unfair tactics in the context of third-party sellers. Even if I give you that argument, the impact has to be on the consumer. And if you can't find the impact to the consumer, even if there is not true price competition, which leads to effective and efficient price discovery, if prices are still low to the point where the consumer is very happily paying what they're paying, you don't have an argument. There is not an actual impact to the internal link, what we call in like actual debate terms, to the thesis of what you're trying to make. And so as a result of that, I think, it's going to be tough. The reason the Obama administration never brought antitrust cases, I mean, if you look at the Obama administration, I think they brought maybe 1 or 2 cases over the 8 years, is because they didn't want to bring a case that they couldn't win because they knew it would decrease the credibility of the FTC. I don't know if Lina Khan wins this case. And if she doesn't win this case, I think the FTC is going to be in a world of trouble when it comes to credibility when they try to sue the next company that tries to do something that is anti-competitive. So we'll see if it happens, but at the end of the day, I'm not sure exactly if it's the best thing for the FTC. I mean, if they don't think they can win, you could have as many fancy lawyers as you want. If you don't think you're going to win this argument, because at the end of the day, the consumer really loves Amazon, then it's going to be tough for you to get some credibility on that. Okay, let's move on to Tesla. Tesla got a downgrade today by Deutsche Bank. I've always loved that word, Deutsche Bank. It sounds like douche bank. but we don't say douche bank, we say Deutsche Bank. Deutsche Bank cut its Tesla Q3 2023 delivery estimates considering the company's factory downtime for upgrades, retooling, and preparations. It also predicts a downside risk to earnings for Tesla in 2024. Deutsche Bank analysts reduced their Q3 2020 estimates to about 440,000 cars, 6% down from its previous estimate of 455,000. The consensus analysts' delivery estimate is 462,000. So they're assuming 22,000 cars will be less delivered than what the analysts expect Tesla to be able to deliver. They reduced the price target from 300, that was their price target, to 285. Look, I think this is really interesting because Jonah, our good guy, or Jonas, sorry, his name is Jonas, our good guy from the Jonas Brothers brand, basically said Tesla's worth, what was it, $550 or something a share? Tesla right now up 0.09% of the pre-markets. And he did it off the backs of Dojo, did it off the backs of essentially Tesla becoming an AWS for car charging and EV infrastructure. Like, he had a really good, report, 45 pages, for why Tesla should be worth a lot of money. The stock rallied. I think it hit 280 on the highs or something. This was about 2 weeks ago. And now you get a downgrade today. I think, honestly, a lot of these downgrades and upgrades are just, they're here today, they're gone tomorrow. I think the Jonas one was the most significant because it was a real 50-page report, right? That highlighted why Tesla should be upgraded or downgraded. But quite frankly, Tesla gets downgraded, upgraded all the time. I still remember when Tesla got downgraded to $10 a share pre-split. This was May 2019. And I bought shares. At that time, it was trading at 170. Again, pre-split. Obviously, I didn't hold on to those shares, and that is a regret I live with every morning. But nonetheless, Tesla's been through this many, many times. I don't think the Deutsche Bank downgrade has that much to it. Now, however, will there be some headwinds for Tesla? Yes, because there's obviously stuff going on in China. They are ramping up production in a lot of areas, which is slowing down production in other areas. Chinese demand, I don't think, is falling down, but there have been some reports that it's been a little bit tough for consumers there. So we'll see what ends up happening in Q3 earnings. I don't expect an amazing earnings, but I definitely don't expect something horrible to the point where Tesla goes back below 200, unless the market goes back below that. So unless we see that, we should be totally fine. All right, here we go. It is a beautiful day, Wednesday, September 27th, 2023. From the bottom of my heart, thank you 600 people for being here. It means the absolute world to me. In 4 seconds, the stock market is going to open, and we are going to spend the next 30 minutes trying to figure out what's going on in the markets. 9:30 a.m., the stock market is open. Wake your ass up. Here we go. Tesla up 0.27%, $244 0.81 cents. Not bad for Tesla. Palantir, a nice 2% bounce as we open the markets, 14.25. Maybe it's because of the $250 million contract. And if you're just joining in the stream, if you go back to 2 minutes and 43 seconds, that's when I started talking about it. So you'll get about 10 minutes of me discussing the Palantir deal. Maybe it's just macro related, but right now Palantir is up 1.87%. Coinbase, $72, up 3%. SLG, office REIT in the New York City area, $35, up 1.45%. Instacart, $30, $1 below the IPO pricing, but still at $30, not seeing a massive decline right now. Disney at $80.08. It's up barely as the market opens, 10 cents away from going below $80. SoFi $7.54, up 2%. Nike $90, up 0.33%. Amazon on this whole FTC thing is not declining that bad. Obviously, it's down from 140 a couple weeks ago, but I think that's more so the macro, up 0.3%. Today, as the market opens, Netflix at $3.83, Arc Innovation $39.16. The new Shyam Sankar Kathy Wood podcast is likely coming out tomorrow. I think I'm going to watch that live and just do a live stream watching to it and reacting to it. Really excited for Kathy Wood to be able to talk with Shyam. One thing I mentioned in my newsletter yesterday on Daily Palantir is that there was a moment in 2015 where Kathy Wood spoke to Elon Musk personally. I think they did a podcast together as well, and she doubled down on Tesla. She had a moment of conviction, like, you know what, I'm just going to bet the farm on this guy, and it 20x. Maybe talking with some of the insiders in Palantir is starting to be her moment where she starts to really develop that conviction and decides not to sell out of the stock if she loses, some faith in slowing down revenues. NASDAQ 13,129, up 66 points as we open the market. S&P 500 427, up from 425 yesterday. Google's at 130. Enphase looking nice at 120. Enphase got to 116 yesterday, right now at 120. Microsoft at 313. Square at 45, still kind of flat in this $45 range. Meta, they are going to have an event today, the Meta Connect event, I think is what it's called. I think that'll be around 12 p.m. We're expected to see the new Quest Reality 3 and a bunch of updates to their open source Llama LLM project. So a lot of new exciting updates that are going to be happening today with Meta. Bank of America 27, JP Morgan 144, PayPal 59, DNA is up 15% today. They announced a partnership with Pfizer, $331 million. The partnership is enabling some type of cell engineering. I have to go deeper into it. They're up 14% on the day. It's great news for DNA. The problem is CEO sold about 213,000 shares at like $1.70 the other day. And as much as I love the potential of this company, I cannot fathom why the CEO continues to sell the stock at these obviously depressed levels. It makes me really second guess the company, as you see crossing over $2 right now. I think it's a good long-term buy if you really understand the thesis, but the valuation the insider selling is really atrocious. I mean, that's the best word. Like, it is atrocious. And so the partnership today was awesome. I don't know why the CEO is selling 5 days before they get a $300 million partnership. Like, I just don't get it. Doesn't make sense to me. Robinhood 969, Nvidia cracking up nicely to 424, Roku at 68, Zoom at 68 as well. Regional Banking Index Fund at 4119, TFC is up 0.35% at 2835, QQQ at 355, Apple at 172. Seeing Apple continuing to decline, even though iPhone demand seems to be doing well. I guess the market is not convinced that September was a good month for revenue for the iPhone, even though we are seeing lines across the stores. Market's still not convinced that that's going to be enough to save Apple in their next earnings. And in the next earnings, if Apple takes a tumble, the market's going to take a tumble. So that's another catalyst that could really get the S&P to fall down a little bit. But overall, we're seeing a lot of green. Spotify's green, Paramount is green, Celsius has fallen dramatically from 200, but Celsius is green, Marathon is green, Riot is green, CleanSpark is green, all the Bitcoin miners are green, Affirm is green, FinTech is green, Alibaba a little bit in the red, or actually Alibaba is up, NEO is in the red, AMC is in the red, and the rest of the stocks we're looking at are pretty green. Definitely a green open for the market. Palantir at 1434, up 2.7%. We've seen amazing support in the $14 range. I did buy 10 shares yesterday at 1394, about another 10 shares a week ago at 1391. So under 14, I like when people are asking me, hey, Amit, are you buying under 14? I like to buy. And I think there's opportunities to get there. But at the 14 range, I like it to kind of be stable. And we've done a pretty good job being able to be in this $14 range. Let's take a look at Tesla real quick as well. Tesla, 242. So Tesla down just a little bit in the market open. Nothing too crazy. Palantir at 1429 to open up the markets. Green market, not bad at all. Green market. Sasky Rose says, Amit, the thing I don't get about Kathy is how you can lose conviction in Palantir over what they stated, but not lose conviction in other names like DNA and keep buying millions on them. One thing is DNA is $1.80, right? So when she buys 1 million shares, it's crazy because like, oh, 1 million shares, but it's like $1 million, right? She spent maybe $2 million. So it's not that much money she has to really depart with to be able to buy these shares, which maybe kind of makes her think it's not as big of a deal. In Palantir, they thought they were a government contractor in 2022, and then they felt government contracts were drying up. And as a result of that, the thesis completely dies. I personally think that was the wrong reason to get into Palantir. And if anything, if you're going to take that money and put it into Roku, well, that's a whole nother discussion. But as a result of that, that's what lost their conviction. Her conviction is back because she starts to see what the real potential is, especially with AI in the enterprise. And as a result of that, that's why she is back into the name. Let's get an update on the auto worker strike. We have Walter Isaacson here to help us understand a little bit more. He is obviously the author of the new Elon Musk biography. Let me know in the chat if you read the book yet. I haven't read it yet. I am planning to read it. Here's his thoughts on what the UAW strike is about. Quick little TLDR, the strike is continuing. It is getting worse. No negotiations have been reached. We are now, I think, in the 3rd to 4th week of the strikes happening, and another 50 different plants across the country have joined the strike. So let's get an update on what he thinks about the auto worker strike.
Biden rallied the UAW workers in Michigan. This happened on Tuesday as the strike moves into its 13th day today. And now Tesla CEO Elon Musk weighing in on what's taking place in Detroit, criticizing workers' demands as a, quote, sure way to drive GM, Ford, and Chrysler bankrupt in the fast lane. For a closer look at that fast lane, let's bring in Walter Isaacson. He's always in the fast lane. Nice to see you, sir.
Good to see you again.
Author, of course, of the new book, Elon Musk. That's the name of the book. He is Walter Isaacson. We should also say he's an advisory partner at Perla Weinberg, professor at Tulane University and CNBC contributor. And I believe the book is #1 on the New York Times bestseller list.
Mm-hmm. Not because of me, but because of the interest in Musk.
Congratulations.
Thank you.
So let's talk about this. Do you believe, or I guess, what do you believe, A, is the right answer for the UAW and the automakers, and do you think Elon's right?
I think this is not just about the wages right now. It's about the fast move we're doing to electrification, EVs, and that changes everything. If you're building an EV, it's at least 30% and will soon be 50% less time on the assembly line, less work to be done. Likewise, the batteries aren't unionized. So as you make this transition to electric vehicles, it's very disruptive. For Musk, he's trying to bring out a $25,000 global car, compete with BYD. He's going to do it both in northern Mexico, but in Austin, this new line. And I think if the legacy automakers don't figure out how to make this transition, that's what the strike's about, is figuring that out.
So when you see President Biden standing with the UAW workers, do you say that's right, that's wrong, given where we are? I mean, I think there's two issues here. We're at a time where he's pushing EVs, which makes this all that more difficult. At the same time that he's saying we want to be a country where everything is manufactured here. BYD, what do they pay, $7 an hour? Right?
Yeah, and the UAW is now, what, $65 an hour, so $110,000 a year, which would go way up on the strike. And this is a complex thing that you all debate all the time here. But if you can do $7 an hour in China and $65, $70 here, that's going to be a problem. Likewise, automation is going to be a problem. Likewise, electrification is being a problem. So in some ways, it's a bit like, King Canute railing against the tides. You got to figure out where the tides are going to hit.
And then how concerned do you think, and maybe this is true of Tesla or Rivian or some of the other automakers, there is a knock-on effect, which is to say that even though those are companies that don't have unions, that if in fact these unions capture much higher prices, it does press the price higher everywhere else.
Oh, absolutely. A Tesla worker may make $45 an hour, but they get stock options. And that's confusing if the stock's at, 100, then 400, then
And there was a period of time where clearly Tesla workers, even though they weren't unionized, were getting paid much more, frankly, than the unionized workers were at GM. Having said that, there's a period of time where the stock was at a different place where it is today.
Yeah, I think there was a period of time where a worker at a Tesla plant was making more than you because the stock was
No,
more than just.
Yeah, more than me.
But that's a complicated thing. Do you want stock options? And Musk got in trouble at one point when they're trying to unionize a plant and the Fremont plant. He said, but you might lose your stock options, and that was considered unfair labor practice. I think that your initial question is, yes, it's going to put pressure on Tesla, Rivian, and everybody else. if there's a significant wage increase for the UAW workers, then there's going to have to be that for the Tesla workers, even if they're getting stock
Could they ever
options.
unionize?
Now, real quick, and then we'll continue playing with this. This is also very, very interesting because if the union workers are able to get 40% more payment, 32-hour work week, these kind of, crazy demands that they have, and it actually happens, or even 80% happens, the fear is that Tesla workers will be like, well, shit, why are we settling for $45 an hour? We can increase our benefits, decrease our work, all that stuff. The problem, which is what Walter Isaacson is trying to say, is that Elon was very smart back in 2017, 2018, when this whole union debate with Elon was going on. It was the CEO versus the company workers, and the CEO was like, guys, the stock is going to explode. Trust me. And the workers took a bet on Elon. I mean, this is why Elon is such a fascinating figure. He promised the stock would explode and that you should take stock options over a union because he knew how bad a union would be for his workforce. And he was right. The stock 20x since 2018. And those workers, you think of a factory worker getting millions of dollars in stock options. And so for that reason, Walter is saying if the stock's going to still go to 10 trillion, right now it's 700 billion, when Elon promised his worker stock options was at 40 billion, there's still a lot of upside for these workers, which would deter them from getting into a union.
Those plants too. I mean, that's
well, there was a big drive to unionize. No, I don't think any electric vehicle maker plants are unionized. I know no Tesla plants are. There was a big push to do it in California, and it failed on this vote. But there will be another push. I am absolutely sure that the UAW at some point will be trying to unionize electric vehicle plants.
They lose the whole.
But batteries, by the way, are not included generally in the UAW contract.
That's a big sticking point
and
right
there's
now.
no engine to build in a electric vehicle.
Ford infuriated the UAW yesterday, I think it was, or the day before, when they said that new plant with China, they were just going to not build it, the plant there, because of these very issues. They were on the right. There are people. It's a project with China, so the China hawks are mad about it. The union is mad about it if it's not going to be unionized.
And by the way, the automakers are getting left behind. Like 90% of these new vehicle EVs are Tesla. Tesla sold more than 1 million, I think, in the first 6 or 7 months of this year. So it's leaving the older automakers behind. And with Ford once again saying, we're not sure we're in this business, we're not sure we're building batteries, this is a larger mess that surrounds the UAW strike.
The mess could get even messier, and I understand there's an election coming up, and you'd like the working class, and Trump was going to go there anyway. Probably I understand that, and I understand student loan forgiveness. There's things that you do, but one thing that I've always complained about with public unions, when a Democratic governor says we're going to get you a great contract, the governor is there to protect the taxpayers' interests and not to let the state get overwhelmed by pension costs, and not to promise the moon to the public employees that he's bargaining with. And then they usually contribute, the unions, to getting the same guy or gal reelected again. This was similar to me. If Biden is there saying, or President Biden is there saying, you need to get this deal, you need $40. If he bankrupts the big three, taxpayers are once again going to be bailing them out.
Well, this was Musk's point, which is you'll bankrupt the big three. Now,
with the help of the guy who's supposed to be protecting the taxpayers of
I'm not.
I know you never do, but
with you and arguing this, but it is true that union workers and the workers are not keeping pace with the profits being made.
I understand that, but should the president be there arguing on the side of the workers when he's representing everybody? He's representing, corporate interests. He's representing.
You're out of my field of expertise.
Oh, you always punt when you.
So I do think that's a little bit of an unfair question by Joe. A couple things I want to say on that. Number one, the president absolutely has to pick a side. Do we want him to pick a side? Probably not, but the president is there to campaign and get votes. Either you're going to pick the big auto workers or you're going to pick the unions. Biden picked the unions. I don't think he should have picked the unions. I think he should have had a more bipartisan democratic way of everyone coming together. And basically what I felt Biden should have done, my own political opinion, I think some of you may agree, is he should have said, let's come to the table. Let's negotiate. Remember, no one is against the auto workers having a pay raise. No one. Everyone wants, they haven't had a pay raise in 5 years. Obviously, they should have a pay raise. The problem is GM, Ford, and these other guys are saying we're putting out an offer, and these guys they're like children almost. They're stubborn. They're just not budging. They're not even coming to the table. If I was Biden, if I was president, maybe the message should be, hey, let's come to the table. Like his message yesterday was keep doing what you're doing. You deserve to get your 40%. And it's like, look, at some level, there is a strong economic argument to make that in 2008, the taxpayer, me, you, had to bail out the automotive companies because of the fact that they didn't have their shit together. Right now, they're trying to get their shit together by negotiating with the auto worker union. The auto worker union doesn't want them to get their shit together. And if they actually go bankrupt because of this, or something really catastrophic happens, we will be bailing them out again. So the point is, Biden should be making a broader attempt to get these both sides to come together to an agreement, especially when the used car price index is coming down dramatically, 15% month over month, and that's a 7% adjustment of the CPI, which means if that thing keeps falling, the CPI keeps coming down, which is great for Biden in terms of inflation and the economy. But instead, he's continuing these strikes to go on and encouraging the strikes in an ideological way in terms of siding with the labor union, which is obviously not going to be the best for inflation in a variety of ways. Joe Biden just wanted to boost Tesla. All of this is great for Tesla. And Elon even said that this is the perfect way to get GM, Ford, et cetera, to go bankrupt, because at the end of the day, if you're not having workers creating cars, and on top of that, your transition to electric vehicles, not only is it not profitable, it sucks. I mean, like, you're just not in the process to vertically integrate like a Tesla to be able to really make EVs at scale. Now you got to deal with the strike and the auto workers. It's just a whole pile of mess that ends up happening. And so as a result of that, this is a big deal for the auto workers, but also very big in the context of Tesla. The other thing that's also really important to think about here is Donald Trump is visiting the auto workers today. So Joe Biden visited them yesterday. The Republican debate is going to be on tonight. I think Finance Junkies will be doing a live stream and actually covering the debate live. Trump is skipping the debate like he did last time to do a Tucker Carlson interview. This time he's going to see the auto worker union. And it's going to be very interesting to see what his message is, because his message might not be this whole, keep doing what you got to do. You got to fight against the man. His message might be, let's come to a deal. I mean, the guy did write the book, The Art of the Deal, right? So he might have a totally different message when it comes to this stuff. And it'll be interesting to see how the auto workers kind of reconcile and deal with what he ultimately has to say. So look, Tesla got downgraded today. I think this is only good for Tesla. The automotive strike, I think eventually it will come to a deal. I don't think it'll last many more months, but it should come, hopefully sooner than later. Defense says, I hope that the NHS does announce who wins their contract tomorrow and delay, since they're about 6 or 7 hours ahead. We should have news in the morning. The NHS deal, an update on that, should be coming tomorrow. I went on their website. I checked September 28th. They said the deal will be awarded. Now, will that actually happen? Given a lot of these government contracts, sometimes they say one thing, do another. I don't know, but we'll see. We'll end up seeing what happens. Let's get an update on Apple. We talked a little bit about it on first, let's go to the charts real quick, and then we'll do an update on Apple, because there's a good bull bear debate that I wanted to show you guys around Apple and see if there actually is some truth to being able to think a little bit more deeply about the stock. 1438 on Palantir, maintaining its gains, up 3% on the day. Not bad at all. Coinbase is up. SLG is up. Disney is up. MicroStrategy is up. Tesla is up 0.01%, but they are up. SoFi is up. Disney is up. It seems like the market had enough of the selling pressure yesterday, and they're going back into buying some of these equities. S&P is up 0.31% for the day. Google is up. Enphase is up. Microsoft is up. Square is up. Meta is up as well. FinTech is up. PayPal being at 59.25 as well. Nvidia also at 425. So it seems like yesterday was a bad day for the markets. They wanted to rebound. 10-year treasuries are down in the morning. That's why I think we're seeing a little bit more liquidity enter into the markets. And the more the 10-year continues to come down, the more we'll have equities be in a much more favorable situation right now. What is the Karp and Kathy interview? It's not going to be Karp and Kathy. It's going to be Shyam Sankar and Kathy. If it was Karp and Kathy, I think that would break the internet, or at least break our section of the internet as Palantir shareholders. But it's going to be Shyam and Kathy. That'll be tomorrow, and I'll probably be reacting to that live as well. All right, let's get an update on Apple. I thought this was an interesting bull bear debate on if Apple has any merits to reconsider, or if the bearish narrative probably is going to play out.
Down 4% since the debut of the new iPhone. What's the bearish view on this?
So the bearish view is that the iPhone will not be able to sustain the stock as it has in the past. The company already told us so, to the extent that it guided to a decline in September revenue, its fourth consecutive quarter of declining revenue, despite the September 22nd launch of the iPhone 15. So historically, the iPhone, still the most important product from a sales and profitability standpoint, has been able to drive shares higher, not this time.
All right, Daniel, over to you. I do want to point out, we had our Steve Kovac outside the Apple store the day when it was released, or you could put in your pre-orders. There was a line out there. So give us the bullish view.
Frank, what we're seeing is that the company is continuing to innovate. You're seeing changes to the industrial design with the titanium, which makes it lighter. The action button gives it more versatility. The camera helps with more photography or better photography and video.
Okay, this part I thought was funny. He's like, well, the camera, better pictures, and it's lighter. I'm like, I don't know if that's innovation, buddy. Now, granted, I don't blame Apple because it's really hard to innovate on this, but I don't know if that's necessarily innovation.
Step back and look what's happening. The ecosystem is vibrant. The install base is continuing to grow, and the company is continuing to successfully integrate the hardware, the software, and the services to drive this differentiated experience. And so, sure, there are concerns around the consumer. China, I think, remains difficult. But when we look out, we see Apple continuing to innovate, and I think the iPhone franchise remains durable.
All right, you just let me into it. We got to talk about China and China risk. Restrictions on iPhones, the debut of a new Huawei phone. Tom, I'm going to come over to you. Should investors be bearish about this China risk?
They absolutely should be bearish. So the big concern from our end is that rising tensions between the US government and Chinese government are going to lead in incremental protectionist behavior by both sides, and Apple could get caught in the middle. Framing that, about 10% of Apple's revenue comes from China. Couple that with a very weak economy in China, and Apple may not only be able to rely on iPhone sales, but not only be able to rely on strong sales in China to drive stock higher over the next 12 months.
All right, Daniel, over to you. Investors are clearly very bearish about this China risk. Is there some upside in China that maybe isn't being realized in the stock action?
I think there's tremendous future potential in China. And if we look back at what Apple has done over the past decade, Apple has grown their business in a tremendous way. It's driven by the innovation and the product cycles. The Chinese customers, they want the very best. And so while the market certainly remains competitive, Apple has been investing aggressively in their ecosystem. The devices, their services franchise remains healthy. So we see a lot of potential in China from here. Certainly the geopolitical and trade dynamics remain challenging. We've been facing them for several years. I would expect that to remain part of the broader landscape. But I do think Apple, and we're seeing that they're able to innovate and execute through it.
So, I mean, look, I think it's an interesting bull bear debate. Dan Niles of the Future Fund, he is net short Apple. That is the only company that out of the big tech that he is actively shorting right now because he just does not see the bull case playing out for them. I'm not buying Apple. I'm sorry. I'm not. I know Dan Ives got it at $240. I think there's a lot more that has to go right than wrong for Apple to be up today, or to be up over the next quarter. And so I think Apple will go up if the market tends to go up, but just not excited enough as an Apple shareholder. I am a customer. I got the iPhone 15 Pro Max and I'll unbox it live, but not buying the stock. Just not that interested. It's really not because of the China exposure. It's because the PE is close to 30 and their growth is like negative 2% year over year. I mean, to me, it's a very simple valuation argument. Does that valuation have to matter given, all the stuff that Apple's working on? Probably not. And I'm probably wrong on that. But as a stock, it's just not the most exciting to me. One thing I wanted to cover as well, wheat stocks. Wheat stocks, we're seeing a little bit of momentum in wheat stocks right now. There's a lot of green. You got CGC is up 5%, SMG up 0.8%, Jazz up 0.59%, Curaleaf, GitBIF, and TCNNF all up 1%, 1.8%, and 5% respectively. And the reason we got wheat stocks that are just a little high this morning, I'm sorry I had to do it, even though it was predictable, is because a landmark marijuana financing bill has been set to move forward in the Senate, which is really good for wheat stocks. Now, let me know in the chat if you actively smoke weed. Okay, if you don't want to say it, that's totally fine. You don't have to say it. But I am curious if you smoke weed and you're not ashamed. I know Midwest Cannabis, that is his name. If he's still here, I know he's going to be the first comment. But do you actively smoke weed? Like, do you? I feel like it's less taboo now. It's not the 1980s, right? People smoke weed, anxiety issues, all this stuff. Some people just like getting high. My friend in college said he would write 5-page essays in like 30 minutes when he was high. I was like, bro, I don't understand how you could do that, but it was like a superpower for him. So let me know if you do. A new bill aimed at establishing a safe harbor for financial institutions serving legal marijuana businesses is expected to advance to the Senate floor Wednesday. Secure and Fair Enforcement Regulation Banking Act was introduced by a bipartisan group. So this is bipartisan, which is really good. It means it has a likelihood of passing. If passed, the bill will pave the way for the sector to secure greater financing and scale into a broader market. Weed is illegal in Texas. to my understanding. 39 states have legalized marijuana for recreational or medical use, but the sector struggles to scale. In New Jersey, where I'm at, weed is legal. I've been to dispensaries, and I don't smoke weed, but I've been to dispensaries. I've seen them in my area, and yeah, they're real. I mean, you can literally go in and buy a joint, and like it's like buying a cigarette. So it is real in some places, which is great for economic business and obviously opportunities. Not obviously the best if a state has not legalized it. Because the sector can't grow, right? You need it to be legal pretty much everywhere. There are lots of parts of Europe where it's not legal. There's a lot of parts of the Middle East. I think in the entire Middle East, it's not legal at all. So marijuana is one of those things that is taboo across the world, but the United States is less prone to criminalize it, more likely to try to make some money off of it. My personal opinion, look, if it can make money, let's get some money. I mean, if this thing brings in revenue, and I think so far it's brought in billions of dollars to the state of New Jersey itself, yeah, I mean, if people are going to smoke it, instead of doing it illegally, let them buy it. I think all the science is pretty clear that although it might, mess with your head a little bit, it's not going to kill you like heroin or cocaine or anything like that. So, yeah, I'm a proponent of it. And we obviously see some wheat stocks having some momentum today on this news as they are going higher. There's only two that are red, MO and Abby. Oh, Altria Group is an interesting one. This one pays like a 13% dividend or a 9% dividend. Steve told me about this one. They actually bought an entire subsidiary of companies that focus on weed. Altria Group does sell cigarettes. So if you're not a fan of cigarettes, don't buy them. But that is their bread and butter. Marlboro, I believe, is the brand that they own. So that is the main part of their business as well. Okay, let's see what we got in the chat. No weed makes us stupid. Wake and bake, decriminalized. Would not recommend daily use. I smoke a blunt every day. Okay, there we go. You got people. Robert says he has never smoked weed. Elon smoked weed in Texas on the Rogan show. Elon has definitely smoked weed in his life. On the Rogan show, he smoked it like he took a puff and he didn't even inhale. So I doubt if he actually smoked it. Crossroads said he never smoked. Joseph says Philippines prison is god awful. Do not want to go there for weed. Wow. So Philippines, if you got some weed, you're going to prison. It's tough, man. There are some states. I think Singapore is also heavily criminalizing this stuff. America is actually fairly liberal when it comes to weed use because a lot of parts of the world do not allow weed to be legal. All right, so we got some people in the chat smoking it, some people not smoking it. It is a personal decision. Let's get one last look in the markets, and then we'll go from there. Erwin says, it's always so wild to me that it's still illegal back home in Nebraska. I live in Colorado now, and it's like getting a beer. Yeah, that's the other thing. I think Colorado was the first state to legalize it for recreational use. So if you are in Colorado, weed is pretty normalized. If you're not, if you're in places like Nebraska, more southern states, Alabama, you're likely not going to get any legalization of that. Palantir up 3.7%. I think this is because of the contract. I'm starting to think that the contract is getting into these institutional trading algorithms, and they're bringing it up a little bit. 3% on the day off retail. I mean, maybe it's definitely possible, but could be because of the contract. And you got SoFi up 3%. Now, one of the reasons that Palantir and SoFi are up is maybe because the entire market is up, so the contract doesn't matter at all. Again, I talked about it. If you go to 2 minutes on this morning open, you'll see me talk about it for 10 minutes. I have a video coming on it later today. But we do have Palantir and SoFi up 3% on the day. S&P 500 is at 426. Oh, so that actually came down a little bit from 427. It's still green for the day. And you got FinTech, JP Morgan, Bank of America, PayPal, Meta, Big Tech going green. We got a lot of green. If you look at the left-hand side of my screen, Robin at 975, NVIDIA 423, we definitely got a lot of green. Not a bad open, especially after yesterday was a tough market open. We're seeing a lot more green here today. All right, that's it for me. Thank you, everybody, for joining. We hit 700 people today, so let me ring the cowbell for that. Thank you all for 700 people today. That was a big milestone. We've had 700 people before on the market open, but today on the new open, we've never hit 700. So absolutely means the world to me. I know you guys get tired of me saying how grateful I am, but it's the one thing my mom taught me growing up. You've got to show gratitude if you want to get anything good happen in life. And I'm incredibly, incredibly, incredibly grateful. This is the most exciting part of my day because the rest of my day is pretty busy and boring. I'm stuck on the computer. To be able to talk to 600 people in the morning, get ready for it, and present something good and hopefully leave you guys with some good information, it means the world to me. And so thank you guys so much for joining. Last thing we're going to do for the day is word of the day. Eudaimonia.
Eudaimonia.
Eudaimonia. It means happiness or well-being. Interesting. Let's use this in a sentence. After years of hard work and self-reflection, she finally achieved a state of eudaimonia, finding true happiness and fulfillment in her life. Many philosophers argue that the pursuit of eudaimonia should be the ultimate goal for individuals, as it encompasses not just monetary pleasure, but also long-term well-being. Eudaimonia comes from the Greek word eudaimonia. The root eudaimon means a good or benevolent demon or spirit. It comes from Aristotelianism, the philosophy of Aristotle, Aristotelian ethics. That makes sense why that Greek word comes in there as well, around happiness governing your life. Interesting way to talk about happiness, eudaimonia. I hope you all have a eudaimonic day. I probably used that wrong. I hope you guys have a happy day. Kill it. It's Wednesday. See you guys for Finance Junkies. Update on the Palantir $250 million deal coming in a couple hours. And we'll be covering the debate live on Finance Junkies today, 9 p.m. Eastern Standard Time. No omit Eudaimania. Thank you, Crossroads. I appreciate you guys. I will see you later today. Thank you for joining me on the Market Open. Bye, everybody.